Tandon joins us now of Quant Mutual Fund, and Quant Mutual Fund has been in the news, right reason, wrong reason, but they have been in the news. Sandeep Tandon, good morning. Thank you for joining us. I'll
Morning,
ask you a point blank question. You are a regulated entity, and you're managing money for retail investors and institutional investors. In the light of what is surfacing up on other media channels, what they are claiming and they are indicating as to where the SEBI investigation has moved against Quant Mutual Fund. What is the status on that? What is the reality and what are the facts?
Hey, Nikun, generally we don't comment anything. Being a regulated entity, we don't comment on any sort of speculation. We are answerable to the regulator, and whatever in the past they have asked, we have given that. And beyond that, we don't comment. It's a like narrative somebody can create, and somebody can imagine few things and create their own narratives and build a story around that. It's very difficult to comment something which is a very completely imaginative narrative which somebody is trying to create and malign us. And beyond that, we don't bother too much about it. We are focusing on our work, which we are doing, and we are happy to say that we are performing well, and we remain focused on generating superior adjusted return. That is our mandate, and being a fiduciary responsibility, we are fulfilling that space quite well.
Don't you use this forum to clear the air as to what is the status of the SEBI inquiry? What was the last formal communication you got from SEBI? Because you've gone on record and you've said that, look, SEBI was investigating few things at Quant Mutual Fund, and we've not really spoken about that topic with you. So let's revisit it. And why don't you update us?
Nikud, as you are aware of that, yes, SEBI has asked certain data which we have provided, and it is now it's a legal matter, and say we are cooperating. That's a stand we maintain, and there is no new update which I can share with you.
The last update from SEBI. Why don't you refresh, our memories here?
Last update was only thing SEBI has asked for certain data, certain data points which we have given to them, and beyond that we have not heard anything beyond that.
Why suddenly there is so much of speculative news flow in and around Quant Mutual Fund? Why is that happening?
It's very difficult to answer that, okay? But you have to understand, as you grow, some people will like it, some people appreciate, some people will not like it. It's a part of business. As a human being, we have our own characteristic, and we, being a behavior analyst, we always believe that narratives will be created, narratives are bought and sold. So we understand that narrative very well, okay? So some people will really appreciate what we have generated for investor community, what sort of return we have generated in 1 year, 3 year, 5 year. Virtually in all categories we lead, okay? And it's not about the relative outperformance, and even superior risk-adjusted return. So I think obviously some people will not like it. So you have to understand that this is a game people will play, and if you want to fall into that prey, then it's a very different perspective. We think we don't bother too much about it, and we just focus. It's a noise. Noise will be there. You have seen market for years. How narrative and noise are different. So people create noise, create narrative, and you see the reality is very different. So we just remain focused what we do, and beyond that, what else we can comment.
And I'm glad that you're coming out in open, and you are, in a sense, really being forthright in your communication. Yeah. So let's look at the other reality, which is the business reality.
Yeah.
Ever since this, I won't use the word narrative, ever since the news came, I think it was middle of June, when SEBI had started an investigation, what has happened to the brand Quant Mutual Fund, both in terms of inflows, in terms of new client addition, in terms of retail interest? How have the flows moved?
So barring first 7-8 days where we saw some redemption, which we have communicated to all the stakeholders also. After that, everything business is back to normal. Okay, we are seeing continuous inflow. You have seen that recently we have crossed 1 lakh crore mark. So we are one of the. I don't think in any mutual fund industry anybody has grown this sort of size in 4 years. So that's a big achievement, and I think that credit goes to a lot of retail support which we got, because we are predominantly a large retail house. So a lot of support came from tier 2 cities also, and B30 beyond 30s also. So it's very important that whether Quant brand has been established among masses, answer is yes. It's a very trusted brand. which we have created. And what is very important is an asset-light model we run without any branches, without big sales force. We have able to generate. So this business is all about performance, performance, and performance. Okay, and how you generate consistent, superior risk-adjusted returns year after year. We have, and we are not bothered about what happened in 1 quarter or 1 month, because mathematically you cannot be right and you cannot be top of the chart all the time. But if I have to look at from 1 year, 3 years, and 5 year perspective, which is the existence of Quant Mutual Fund, when we took over in 2018 from that Scott's management, since then we have able to turn around, and we have emerged one of the best performing and the fastest growing asset management in the country, and which we are very proud of, that investors have trusted us. And we have created a great franchisee, okay, and not with the background of branches and marketing, which is the case with the industry has grown with this thought process that without branches, without salespeople, you cannot do. We have demonstrated in the digital world. We are the biggest beneficiary of this digital revolution and India growth story. So if you really look at, we have only 2 salesperson, okay, which has been an everything businessing. Yes, we have very large team on the investor support. We spend sizable money on the analytics side, and that is our strength. We don't want to spend money on the branding and the distribution side, because we believe our distributors also are like a partners with us, so they are supporting us.
Right.
So we spend money on analytics, and I think returns talks about our performance, what we have generated. So all the thesis of our VLRT framework of predictive analytics, we are trying to educate people how dynamic world it is, and this India's
Right.
first dynamic style of money management is called.
No, I mean, I'm fantastic. Sandeep, what you've achieved in a competitive industry with a late start, returns and size on a large base of 1 lakh crore, I think have been quite extraordinary. I just want few numbers, Sandeep Tandon. What is the total net inflow? I'm not talking about gross. Net inflow which Quant has on a monthly basis, and how much market share you currently have now?
So if you really look at, we get between 100 to 200 crores or sometimes even 300 crores on a gross basis. Okay. So that's the number we get on inflow. And even let's say talk about yesterday, we were on 200 odd crores. So I'll give you some numbers. So 200 plus something was a gross number as of yesterday. So this is what we are getting for last, maybe for last 8-9 months. This has been our flow, which has increased. So it started with 10, 12, 20, and now we are 200, 300 sort of range. Sometimes we get even higher also, but average around 200 crores inflow, gross inflow, we do get.
Gross inflow daily, no, Sandeep? Because it cannot be a monthly number. I'm talking about the
daily number. This is number.
This is the daily number, right?
Yeah.
Okay, that is.
So multiply by 20, you can get. Okay, 2000.
Saturday, Sunday, you don't work, so you don't add that back. Saturday, Sunday excluded.
Yeah. So 2,000, 2,500 odd crores.
And how much market share you have right now in terms of fresh inflows?
I think we get a very sizable, okay, if you really look at last few months data, okay, we were one of the biggest player in terms of market share in small cap. We were getting as high as 50-60% also, mid cap also, small cap, techs also. So we have been gaining market share, and it's not only last few months. We have emerged as a top 3 or top 5 AUM gatherer and top 5 folio gatherer in last 3 years. So it has been consistent for last 3 years. We have emerged in that category.
The market view, Sandeep. We are staring at a situation where globally things are turning slightly volatile. Crude has suddenly fallen. Yields have suddenly come back, or the bond markets have rallied in favor of bond investors. And also US financials, I just looked at the data, US financials have started correcting. When this combination occurs, it means that the world is getting ready for an impact, so to speak. Should investors brace themselves for an impact?
So Nikunj, if you recollect our previous interaction also, right from July, we have been saying that the current quarter between July to September will be the most volatile quarter in the FY 2024. Okay. And when we saying that why should be volatile? Because we have been talking about cross asset, cross market volatility should spike, and the background of geopolitical volatility, currency volatility, which means world is not going to be stable in this period. And that's one of the precise reason in last 3 months, our portfolio, if you look at, is more skewed toward defensive side. And we still maintain that this cycle has still not ended. You have seen the choppiness of volatility, which is there. The last 2 days, we have seen massive covering. Now futures are again sharply down. Oil has corrected significantly. So our view was that oil will correct. Our view is that gold will also correct sharply in the current month itself. So that's some data points. So we work on some of the macro data and the predictive analytic thesis, which was endorsing this sort of vulnerability or volatility will be there, and hence we like to play it safe. We are not saying that we are very negative on the market. Neither we are negative nor we are complacent about market. We want to be playing safe. If some vulnerability aspect is there, we should not fall into that trap. Okay, that we have been very aggressive about the equity market, the way we build our portfolio, we manage our portfolio in last 4 years. We turned extremely cautious in September 2021 for a few months, and again in July 2024 we have turned cautious, and that's a based on our data analytics. This is not based on the gut feeling, or this is not based alone on the valuation has moved, our IPOs have coming, a lot of narratives are getting built around that. We look at the combination of multiple factors, and since we run multivariates model and our data points are endorsing, you have to lie low. You don't have to be play on front foot all the time, and that's something what we are doing. We are playing on back foot, but we are playing with safety. See, Nakuj, the strength of the Quant is all about how you manage risk. We always say we are in the business of risk management. Returns a byproduct. We have to manage our risk proper. And given the context, when we see vulnerability, in particularly in the developed market, we talked about US in the currency front or the commodities front, we would like to play safe. We don't have to be on front foot all the time.
So Sandeep, what is the trade for next 6 months? Is it growth because rate come down, inflation is down, so go back to growth, let's say banks, NBFCs, or just hide in defensive? Take a safety cover, so to speak, because things will be volatile, and if you hide in the comfort of FMCG and bit of pharma, bit of IT, you are better off.
So purely on what we call it defense side, I think defense is also is a definition which can keep on changing from time to time. And some point in time, let's say capital goods was very defensive, still defensive, but on relative basis, it has lost its relevance because of sheer grossly overvaluation. But if I look at the current context, let's say FMCG is a space which has been underperforming for a while. Okay, that's a space we have built our exposure. Valuation was not cheap, but they started trading in the neglected territory, and hence that was the play. So is the case with pharma, and so is the case with insurance, and so is the case with some of the healthcare space. So these are the areas which we remain very constructive, and I'm saying that even sometimes you have to underperform a bit. It should be a part of a strategy, but let's play safe when we see data points are showcasing that things are going to be more volatile. So I like to play safe on through these sectors.
Okay, Sandeep, good to have you on the show as always. Thanks for joining in with your thoughts.
Yeah, thanks for inviting us.